Hello everyone and welcome back to my final morning report chart analysis video on Friday the 23rd of September with me, Richard, market analyst at Handset Markets. We're looking at gold, and we had that sharp rally on Wednesday on the sort of disappointment really that the Fed wasn't more hawkish than perhaps the market had been anticipating. Or wasn't as hawkish, I should say, as the market had been anticipating, and subsequently the gold price pulled higher, and again marginally high yesterday, although sort of didn't really sort of push on from that 1343.60 reaction high there, sort of 20 odd bucks up on Wednesday, but that move on Wednesday does certainly change the near-term outlook. And sort of maintains the bull control, really, the long-term bull control of this trend channel, and the sort of holding above 1306 area breakout, and I think it looks still pretty positive, really, doesn't it? So I think we're still fairly strong on gold. The improvement above 1330, which is a pivot line as well, that sort of takes on a more of a positive outlook as well. That 1330 again came in yesterday to act as a reaction low, and is holding once more today, so we're still positive above 1330, and I think anything above 1325 to 1330 really. If you look on this hourly chart, you can see that 1325 to 1330 is sort of a pivot range, really. Some key levels in the past few days, and also been supportive on the way back higher in the last few days as well. 1325 initially sort of supportive, and then 1330 as well. So 1330, 1325, decent area of support for gold near term. I think whilst you trade above that, I think you're still fairly positive within the medium term band, which is a sideways move, but we're still not really able to gain the traction to the upside to sort of test the upper limits of this range. So 43.60 yesterday was the reaction high. 1352.65 is the September high, and there is still this sequence, I suppose you could argue, of lower highs really on gold throughout the last few months, and it needs to sort of start breaking that sequence of low highs in order to really start to think that the bulls could engage an upside break from this range. But we're still very near term positive above 1330, but you still need to break through that these lower reaction highs, and 1352.65 is the first one of those reaction highs you need to break through. But momentum indicators, stochastics picking up is positive, obviously. On the hourly chart as well, you're sort of taking on more of a positive configuration as the little dips are being bought into. It'll be interesting to see now if this latest one overnight today will be bought into, and you hold the lows around 1334 to push higher again. But for now, the resistance comes in with yesterday's high 1343.60, 1352.60. So a few levels to work with there, but we are still relatively positive on a near to medium term basis, but still trading within this medium term range. So I wish you good luck in your trading today, and I'll speak to you again next week. Thank you.